Hello everyone, welcome back to Chart Engineers. This is going to be the third lesson in the syllabus, and in today's video we will be going over price and time. In today's lesson we will be talking about price characteristics, accumulation, manipulation, distribution, and after that we will explain session times, and then we will explain how the accumulation, manipulation, and distribution, also known as AMD, work well with each session time. So first, let's move on to price characteristics. Firstly, price can only do three things. So it can either move sideways, like in this example below. And when price is moving sideways, some of the words and terminology that we use to explain this is that price is accumulating, consolidating, or ranging. So in the Discord server, when we say that price is accumulating, consolidating, or ranging, we just mean that price is moving sideways, like it is in the example below. And then price can either move down, and what this means is that price will start to trend down and start to break structure lows. So what we would call this is that price is expanding or trending down, like in this example, price has started to move down. And finally, price can then either move up, and this is just the opposite of price moving down. So it's when price starts to break structure highs and starts to expand to the top side, like it is in the example shown below. So now that we know price characteristics, we can now move on to accumulation, manipulation, and distribution, which is also known as the AMD fractal. So what is AMD? AMD is a fractal pattern that we use to help us get a better understanding of what the markets wants to do. And when we say AMD is a fractal pattern, it means that it works on all time frames, from the monthly time frame all the way down to the M1 time frame. So AMD consists of three steps, and they are accumulation, manipulation, and distribution. And by the end of this video, you should have a good understanding of what AMD is and how to identify and trade them. The AMD fractal will help give you a better understanding of where the market wants to go in terms of direction. So this will allow you to be on the correct side of the markets more often than being on the incorrect side. So now let's move on to the first step of AMD, which is accumulation. Accumulation is when price starts to move sideways, like it is in the picture below. We can see that price is just ranging between the two blue boxes, and it's ranging without expanding to the top side or the bottom side. So when price starts to range like this, it usually leads to a big expansion to either the top or bottom side, as we remember from price characteristics that price can only do one of three things, which is range, move up, or move down. So let's assume that before the market started to accumulate like as here, let's just say that price was in an uptrend. So when price starts to range like that, a lot of retail speculators would assume that price will continue to trend up. So what they do is continue to take long positions with their stops below accumulation, and I'll just quickly mark that out for you. So their stops would be there, and as we discussed in the liquidity video, this means that there will be a lot of liquidity below the accumulation. So at this fractal low, there would be a lot of liquidity, also known as sell orders, as the only way to exit a buy position is to sell it back at a cheaper price. And if you're still a bit confused on this, I would recommend that you watch the liquidity video back again. So this would then lead us to the next step in the AMD fractal, and that is manipulation. Manipulation is the second step in the AMD fractal. Manipulation when institutional speculators see that there's a lot of liquidity above or below the accumulation, and in this example we will just assume that there's a lot of liquidity below the accumulation. So they know that there will be a lot of retail speculators who are in long positions with their stops below the accumulation, and as we know, trading is a zero-sum game. So the institutional speculators would want price to go lower so they can trigger their sell orders. So here we see that price goes down to take out all of the stops below. So the retail speculator sell orders were then paired with the institutional speculator buy orders. So what this does is that it stops all the retail speculators out, and this is called the manipulation phase of the AMD fractal. And now we will move on to the final stage of the fractal, which is distribution. Distribution is the last step in the AMD fractal. So distribution and expansion mean the same thing, and that is when price starts to trend upwards very quickly, or when price starts to trend downwards very quickly. And this will occur after the manipulation phase, and price will usually distribute in the opposite direction of the manipulation. So here we see after the manipulation, price moves up very quickly. So we see 4 very bullish candles, and this is because of the injection of liquidity in the markets after pairing the retail speculator sell orders with the institutional speculators buy orders. Our aim is to be in the distribution phase of the AMD fractal. So we would want to be taking positions after the manipulation phase happens, and this is because we don't want to be taking long positions too early like the other retail speculators who got stopped out during the manipulation. And this is because the distribution is a big movement, so that's why we would want to be in the distribution phase. So in this example, if we took a long position before price started to distribute, we would then see price become very bullish and our trades would be extremely profitable. So now I've explained the AMD fractal. I'll just give a quick recap in the next slide. So just to recap, in an AMD pattern, we will first get the accumulation, then the manipulation, and then finally the distribution phase. And this would then be the AMD complete after all 3 have happened. So the example I've shown you here is on the H1 chart on XAU USD. However, AMD is a fractal pattern, which just means that AMD can occur on all time frames, and the difference between the time frames is how much it will distribute, so how many pips it will distribute and how long it would take for the full AMD to occur. So on the monthly it could take a couple of months, and on the weekly it could take a couple of weeks, and the daily will take a couple of days. And the next difference is how much it will distribute. So on the monthly time frame it will distribute a lot more compared to the 5-minute time frame. But other than that, the same rules and characteristics of AMD are the same on all time frames. So now that we fully understand what AMD is, I'll be able to move on to session times. So session times are the times that the markets are most volatile. So this just means that at these times the markets will be a lot more liquid and have a lot more movement in them. So when we're trading, we want to trade at these time periods so we can capitalize on the liquidity and on the big movements in the markets. So the first session is the Asia session, and this is from 1 AM till 4 AM GMT. So at this time the markets will be volatile, and that is because this is the time that institutional speculators in Asia are starting to trade. So there will be a lot of liquidity in the markets during this time, and Asia is usually the least volatile session compared to London and New York session. So this is when price will usually just accumulate. The second session is the London session, and this is from 7 AM till 10 AM GMT. The markets will be volatile and active during these times because this is when the institutional speculators in London will start to trade. So this will bring a lot of liquidity and volume into the markets. And in a bearish day, the London session will usually create the high of the day, and in a bullish day, the London session will usually create the low of the day. So this can be seen as the manipulation session. So first we'll have the Asia session, which price could accumulate, then the London session where price could manipulate, and then we would have the New York session, which is from 1 p.m. till 5 p.m. GMT, and the markets will be active during these times because this is when the institutional speculators in New York will start to trade. So this will bring a lot of volume and liquidity into the markets. And furthermore, in a bearish day, New York will usually create the low of the day, and in a bullish day it will create the high of the day. So this can be seen as a distribution session. So we would have Asia accumulation, London manipulation, and New York for the distribution. And then we would be at the end of the day where we would have our dead zone, which is from 9 p.m. till 12 a.m. And a dead zone is when all of the speculators from Asia, London and New York are now not trading, so there will not be a lot of liquidity in the markets. So we will not be looking for any entries during these times because there won't be a lot of liquidity. So now that we understand all of the three sessions and what dead zones are, we can now move on to accumulation, manipulation and distribution, and how they work with these session times. So firstly, we have Asia session, and usually the Asia session is the least volatile compared to London and New York. So a lot of times, like in this example below, price may just accumulate during Asia. So let's assume that before this Asia PA, price was bearish and in a downtrend. So when price accumulates like it has here, a lot of retail speculators will start shorting the markets because they believe that it will go lower. So they will short with the stop losses above the accumulation, and this will build a lot of liquidity above the accumulation, which can be seen here. So when the London session starts, the institutional speculators will see there's a lot of liquidity above the accumulation, so they would manipulate prices to go higher like it has in this example. This will then trigger all of the buy orders which are above the accumulation and pair it with the sell orders of the institutional speculators who are trading in the London session. So what this means is that all of the retail traders who are shorting during Asia with their stops above the Asia high, that builds a lot of liquidity, and then in London session the institutional speculators manipulate prices higher to stop them out. And then once we get this manipulation in London session, we will then move on to New York session. So we will see what happens in the New York session, and we see that price starts to distribute lower. So this is an example of how AMD and time works well together, as we had accumulation throughout Asia, then we had a manipulation during the London session, and then during the New York session we had the distribution. So how we would ideally trade this is to wait for the manipulation to occur in London, and then we will look for an entry before price distributes lower. Also, we see that the high of the day was made during London session, and the low of the day was made during the New York session. So this is a clean example of how AMD would work with the session times. So now that we've got an understanding of AMD and session times and how they work together, we can now move on to how you can backtest and spot AMD. So now that you lot have an understanding of what AMD is and how to spot them, I would recommend that you backtest them yourself, so you train your own eyes, so it's easier to spot them in actual live market conditions. So here's a chart where I'll just quickly show you two more examples. So first we've got the accumulation, then the manipulation, and then the distribution, and then straight away after we've got accumulation, manipulation, and then distribution again. So these are just the last two examples that I'll show you. So now we've come to the end of this video. So I hope you found it useful, and if you've got any questions, then just let us know on the Discord server. So yeah, I'll catch you all then.